Calvin Russell, CEO and founder of 850 Club Credit Consultation. Hope everyone's doing well today. Today we're going to talk about what credit score is needed to buy a home in 2022. All right. So the great news is that the housing market is still looking for certain types of credit scores. Okay. So let's go ahead and break that down. So number one, you got to decide what type of loan you're looking to obtain, okay? And to keep things simple, we're just going to just keep it simple as FHA or conventional, all right? Now, you also have VA, but you would more than likely know if you qualify for VA, but don't worry, I got a video coming on that here as well, all right? So, but for now, let's just mainly focus on FHA and conventional, assuming you don't qualify for a VA loan. For those who don't know, that's usually if you're in the military. And if you're not sure about that, again, you can wait for my video on that, or you can always just research and just see, what the requirements are if you've served time in the military, all right? So let's go ahead and start off with FHA. FHA is probably the most popular loan type that is available. It's really not really a loan type. It's more so loan insurance in a sense on a particular loan itself. But to keep things super simple, everyone just calls it an FHA loan. Okay. With an FHA loan, you still have to meet, basic requirements like your debt to income has to be, at a certain percentage or under. Some lenders kind of play around with those numbers, but for the most part, they're going to hover in certain ranges. But again, you got to talk to a lender to find out what that debt to income is. Okay. But don't worry. Do not be afraid about debt to income. Things can always be paid down, or you can always get a cosigner, or you can always increase your income, or you can always decrease your expenses. So there's always ways around something. Okay. So I'm saying that to say don't be alarmed with DTI. All right. So that's number one, your DTI. Obviously, your credit score, right? That's going to most definitely play a role. And then there's some other factors as well, too. Of course, your income. Yes, we talk about DTI. That's debts to income. But then we're also talking about just income in general. Okay. And of course, a lot of other factors as well, too. Time on your job, your taxes that you've been filing, any previous bankruptcies, foreclosures, things of that sort. Okay. So now, as far as a credit score goes by itself, going FHA, you need to be somewhere between 580 to 620. Now, FHA requirements, they will allow you to get approved for an FHA loan if your score is under 580. However, it's a lot more red tape. If you want to go through that route, you do better just doing what it takes to improve your credit score just a little bit to get to that 580 to 620 range is going to be well worth it. When you're between 580 and 620, you still don't necessarily have the absolute best terms available. However, you're able to get reasonable terms to go into home ownership. The reason why reasonable terms are always good, because you can always increase your score over time and then just refinance. The same thing that people do with auto loans. But a lot of people forget that their auto loan terms, same as mortgage loan terms, personal loan terms as well too, all of that comes from where your credit is currently, right? Or was when you got that loan. But if your credit goes up over time, no one's going to call you. Well, you may get pitched in sales and stuff like in the mail to refinance, I'm sure. But at the same time, I'm saying to say that the current person that you have the loan with, that auto loan, that mortgage loan, whatever, that personal loan, they're not going to call you necessarily to refinance unless it's usually like a mortgage loan, and because they can, again, they want to regenerate your, that business. But people jump in and out of cars so much. That's exactly why I want to do this video. Is because sometimes people get focused on the interest rates and where their credit scores are right now, but you still can refinance, later down the line. But if you want to put yourself in the best position possible, then you're going to want to be in that 620 and above range. So number one range is 580 to 620, a little bit of red tape, a few more documents, nothing too crazy, not the absolute best terms, but not the worst terms either. Things that are reasonable, things that make sense to you between 580 to 620. And not all lenders, give loans at that amount, but there's plenty of lenders that do that are available. Okay. The next tier, as I mentioned, was 620 and above. You could be a 620, 720, 820, or 850. Your interest rate will more than likely be the same, and you're going to get the market rate. So the market rate is traditionally available at that 620 range as of 2022. But again, that's just the year is just getting started. We're still in COVID. We don't know what the economy is going to be like. We don't know what student loans. It's going to still have a solution on that. We don't. There's a lot of things that are kind of up in the air. So because of that, most mortgage companies are kind of keeping things the same, which is good for us because that means that everyone still has an opportunity to get take advantage of these great rates that are out there. If you want to take advantage of the best possible interest rate, all you got to do is be a 620. It's not like buying a car where you got to be like, 720, 750 to get those best interest rates. You can be a 620. Now, why do the banks do that? They do that because they know that if they're telling people to go to just have a 700 or 720, 750, you're going to have less people in the housing market, especially the buyers. So there's always people selling, but you can't sell anything if no one's going to buy it, right? Or if there's a lower amount of buyers. And that's exactly why the mortgage companies are being so generous, being at 620. Now, that's if you are looking for an FHA loan. That's with 3.5% down. Okay. Now let's talk about conventional. Now, conventional, there's a couple different conventionals, but we'll keep things really simple. Let's say, for example, you're going for 5% down or 3% down with some lenders. Okay. Now, so conventional is going to be heavy on the credit score. So that means that, can you get a conventional at 620, 650? Yeah, it's going to be a little bit of red tape, maybe not necessarily the best terms. So you're probably saying, well, why would a person go conventional and not necessarily get the best terms? There's various reasons. Sometimes conventional allows you to have a slightly higher debt to income. You may already have an FHA loan. There could be a lot of different factors that kind of go into why a person has to go into conventional. The property that you're looking at, they may only take conventional loans. And yes, people can do that. A lot of condo associations, townhomes do that. Of course, sellers, they would rather have a conventional loan on the table versus an FHA loan just because the appraisal process is different. We'll talk about that in another video as well too. So a lot of that kind of plays a role. But if you want the absolute best terms available, the higher the score, the better your chances of getting that. I would say probably between that 680, 720 or above range. So pretty much as low as 680, some lenders will give you the best terms. But if you want to play it super safe, 720 and above is going to get you the best terms available right now in 2022. Okay. Now, of course, things can change at any time. Where the mortgage industry is really relying on the economy. So if the economy is, right now things are kind of shaky because we don't know. Usually, if you have a downward, spiral type of situation, that's usually the economy just, not doing the best in general. But when you have a virus is just uncontrollable at this point, we essentially are waiting for that to go away. When that does go away, interest rates will probably go up and things of that sort as well too. But as of right now, the market's kind of steady. Things are looking pretty good, and you still have time to take advantage of that. So that's essentially what scores you need. Let's recap, okay? If you're looking to go with an FHA loan, 3.5% down, then you're going to need a 580 to 620 if you're okay with not having the best terms available. Again, still not the worst terms, but still good terms to go ahead and go into home ownership or rental property ownership as well. And then if you're looking to get the best rates available with FHA, then most lenders will let you do it at 620, unless you go to what we call a drive-by bank, right? A bank you got to drive by. That's like Chase, Bank of America, the big wigs. They're usually taking higher scores to get you what other lenders will give you at 620. But again, we don't know what we don't know, okay? That's why I'm telling you, all right? So that's what FHA. With conventional, if you want to just get the approval, you can be at 620, 650 with some lenders. But if you're looking to get the best terms available going conventional, then you more so want to go into that 680, 720 or above range. And that's what's going to get you the best rates available. Those down payments can be anywhere between 3%, 5%, and 10% and 15%. And of course, you got 20% going conventional. All right. Hope this video was helpful. Of course, if you like it, you want to go ahead and like it. If you want to share it, go ahead and share it. And be sure to subscribe as we have nothing but great content on the way. Thank you guys so much. Have a great day.